All right, what's up, guys? Welcome. We are live Friday, October 11th. It is 9:38 a.m. Markets just opened. Let me make sure we are running on all cylinders here. All right, guys. So just to recap, because as you can see, my account is down about $3,000, 1.5%. We had a pretty drastic Tesla event yesterday. Very, very excited for the future. I think overall, big picture, it was a phenomenal event. The fact that they had a working robo taxi there is awesome. The robo bus or whatever it's called, the robo van, I think is super cool. I think the reality is, and I made sure I made a tweet about this. The question that you have to ask, and this is for all Tesla investors, is do you think that Elon is going to solve full self-driving? Because full self-driving is something that's going to revolutionize the way we see transportation in the world. So if you think he's the guy to do that, then you should invest. If you don't, then you should sell. Don't get caught up in the details of, oh, they didn't show, what the battery life is going to be for the Cybercab. Who cares? Who cares? Can you imagine Thomas Edison back in the 1900s saying, look, I'm going to invent light, and people asking, well, how long is it going to be able to turn on, or how long do I have to replace the light bulbs? Oh, a light bulb's only going to last 5 months. Dude, that sucks. So big picture, I think this is going to be a huge catalyst. Now, obviously, Tesla did not, the shares, the investors, Wall Street, did not receive it that well. There was a lot of speculation. So let's go in through the trades. Right now, I've actually sold a few already. So I had a few backstop trades because I'm pretty leveraged on Tesla. And considering that Tesla's down close to 10% and my portfolio is down only maybe a 1.5% is a testament to the way that I structured this. So I have 1,000 shares of Tesla. A lot of them have covered calls at 205. So in reality, the fact that Tesla went down 10%, I am making a lot of money on my options. You can see it right here. Today's return close to $16,000-$17,000 that I lost, or that the market took away from the value of these calls, right? So in an ideal world, they'll go under 205 by the time they expire. I'll be able to roll them out and close them out, and then we wait for the next chapter of Tesla, the next run up, which I think will most likely be in November if we have a Trump presidency. I think it'll be very favorable for Trump, for Elon, especially in pushing new regulations for the self-driving car. So I think that'll be a pretty good catalyst. On top of that, I also had a pretty large position of TSLL. I'm actually going to be adding to this position. It's at 1193 as my average cost. I want to ideally get this to 1,000 shares, to have 1,000 Tesla shares, 1,000 TSLL shares. I have some backstop trades here, some TSLLs. These are really just, sell and forget kind of positions. Right now, this went up to 75, which I may reopen a little bit more of these. I don't think Tesla's going to go down to 673 anytime soon. So I'm actually going to open up maybe 5 of these positions it seems it's getting away from us already. But I would say maybe at 70, 75 maybe. Ooh, it's already going down. Let's do perhaps 70. I think we can still get 70 filled. We'll see. There it is. 70 got filled. Perfect. And then on top of that, I also had some puts that I had bought on TSLQ. I have one left. I had bought 8. They're up substantially, about 200%. I had bought them at an average of 130. I've sold the majority of them in the 400s, so I sold one at 380, 4 at 400, 400. So I'm just waiting really to see if what happens, kind of letting Tesla stabilize a bit. Right now it's sitting at 380, I believe it is. So I may put a sell position here at 400. I think if I can get 400 for this, I will let it go. But all in all, it's not bad. I mean, 1.5%, considering where we are with Tesla down 10%, is really not bad. So I think this is just a testament to the way we set up our portfolio. I may buy another 50 shares here just to kind of start averaging down. I don't want to go all in yet on my on the remaining shares because I just don't know where Tesla's going to go. But overall, I feel good about this position. What else? So let's kind of close the chapter on Tesla here. I think overall it was great big picture. If you are just swing trading or you're doing this on a short-term basis, I don't recommend Tesla. There's still a lot of work to be done. But long story, I think Elon showed a vision for the future. And I don't think there's any other company that's been able to do that at all. I mean, if we can point to one company that has put their money where their mouth is as far as predicting and moving towards a future, I don't know anybody else apart from Tesla. So long story short, that's where we're at with Tesla. Now let's go ahead and look at our other positions. This is interesting too, by the way. I also bought some put calls or some puts on my retirement account, which I didn't really have much in. I put in about, I think I had $400 or $500. So I bought a bunch of them, and so we got that started. Look, honestly, if I was to do this again, I probably would have bet the whole portfolio on those puts because we all know with Tesla, man, Tesla is just it's a buy the news, buy the rumor, and then you sell the actual event. It's just the way it's always gone, and I think it's just of the way that. It's a symptom of the way that Elon is, and when people treat Elon to, they take everything that he says at face value. And when you're talking with visionaries, the way that Elon is, people that are looking 15, 20, 30 years down the line, they don't want to talk in concrete points because they know that a lot is factored in to change, but they see what the big picture is. And when I see people complaining about how Tesla took, Elon always over promises, and just look at where we are. I mean, look at how close we are to solving full self-driving. The fact that we are there, and the fact that the technology with AI training is also now it's in infancy. Just think about when both of those growth trends meet. It's going to be really exponential. So let's go ahead and close the chapter here on Tesla. Let's go over to CleanSpark. So CleanSpark has been one that I've just been trying to get out of. I'm not really fond of the company, to be quite frank. If you like Bitcoin, invest in Bitcoin. If that's what you want to do. But these miners, there's a lot of shenanigans that goes on behind the scenes that investors are not really privy to. So basically, what I'm doing here is I'm just going through the wheel, bread and butter wheel, and just trying to get above my average cost so that way I can pretty much just sell the position. So we have a few tens and a halves, $10.50. I have 4 of them expiring today. I have 1 expiring next week. We're doing pretty good. About $250 in premium we're banking. What else do we have here? Let's go look at Intuit. Intuit's been a pretty volatile one. So Intuit had a pretty decent run up this week, which got me a bit nervous. Today is ex-dividend date. So if you did not own shares yesterday, then you are not going to receive the dividend. Usually that's high risk for options because let's say they're going to do an X dividend. I'm sorry, the dividend for the year is $1, right? That means that your strike is technically reduced to $1. So if you get within $1 of your strike, it makes it more. The probability is higher that the individual that holds the calls will exercise it in order to own the shares and take advantage of the dividend. So it's high risk. Now, luckily, all the calls that we sold on it are going to expire worthless, which is good. Another thing that's good is that it finally broke out of that downward trend where it was in. It seems like it hit the floor again at 601, 605. That seems to be kind of the floor. I'm going to take a really good look at this position in the next couple days to see if I'm just going to completely sell it or recommit. I have my October 18th calls expiring next week. These are worth about $0.01. I could probably, if I sell calls against this, I could probably squeeze out $100 per call. So I'm not going to sell these. These longer dated ones, these December ones at 800, it's attractive. I'm not opposed to it. I'm going to just see what the math works out to. So that's pretty much on Intuit. Celsius was one that Celsius has been on a huge correction, and I looked into it. The story with Celsius is that Pepsi apparently pre-ordered a lot of the demand, right? Or a lot of the cans. They wanted to essentially flood the market, and they overproduced last year, which seems to be slowing down growth this year, obviously. So Celsius took a pretty big hit from, I think in the last 3 months, they went all the way up to $95, which is absolutely incredible. However, at this valuation, which I think it's a PE of 34, it was actually lower before. It's not aggressive. If you compare it to Monster and Red Bull, which have PEs between 25 and 30, obviously they're a more stabilized company. They don't have as much growth baked in. But the story there is that Celsius is liked, and they have a pretty large market share. I think it's close to 25 or 30%. So long story short, I didn't have the funds to fully buy 100 shares. So what I did is I bought a call dated for January, and then I also sold a call to offset my cost. Now, obviously, it went right through my call. I mean, I bought this when Celsius was at 28, I believe. This is now worth $1,000. I think I bought this when it was $600. So, but luckily, I have a lot of time. I have all the way until January. So the idea here is to pretty much take that call, take the call and just roll it out. Roll it out. Right now, there's a bit of a correction, which is always good. It's at 34 right now. Celsius is at 34. My call is for 31. I think it expires next week, if I'm not mistaken. Yeah. So, look, I've got a week left. I'm not going to do anything. I'll probably start looking what to do with it closer to Wednesday. But it's good that it's kind of correcting a bit, because this is now going down in value, $20, give or take. I'm not concerned about it. If I really wanted to roll this option, it's worth 365 right now. So if I was to do, let's say, November, 365, if I wanted to roll for credit, I'd be able to get to 34. So maybe I push it out to November. Remember, I have these till January of 2025. So 365 could probably get up to, look, I could even roll it to 35 for a credit, right? But we're going to see what happens. I mean, it's a very volatile stock. So you want to wait till the last possible moment to see what you do with it, because I've had instances where, I had a strike at $30, let's say, and the stock was at 35, and that Friday or that Thursday, it corrects to 28 or 20 or 29, right? So you just never know. time, you control the time. Now, there is the risk of it being called away, so you have to be conscious of that, but that's just another risk. There's another Clean Spark. We talked about Intuit. SoFi is just on a rip. And, I truthfully don't have much upside on SoFi. Look at that. It's almost reaching $9, which is absolutely incredible. The reality is that I have a pair of calls that expire in January, $8, $7 ones in January. So these are locked in. I have one SoFi $10 call, which I probably won't exercise, but it's decent right now. It allows me to sell calls against it. I have $8 puts for November, which they're doing pretty good. I have another $8 puts sold for next week, which with $3 left, I may close these out, to be quite frank. There isn't much, 187. I mean, there's $15. Do I really want to just bet that? So I may buy these back if they bite at 2. So we'll let that ride. But that's pretty much it on SoFi, you see, and that's the issue with being very aggressive with your calls, is that if you get caught on the water, you're losing on all this upside, right? So I have 8.5 call for November, which this one is I could probably roll this one out. But I have no upside right now, so that's why it's important that when you have a position, don't sell calls on the full position. Leave a few untapped. Let a few of them run, or I think it was pretty obvious with SoFi that the interest rate environment, once they started reducing rates, was going to be pretty favorable for SoFi. At that point, it's worthwhile to maybe let them be unencumbered. Do not sell calls on them and just see how it reacts. So that's what's going on with SoFi. I have a lot of positions, but they're pretty much all centered around a couple, 3 or 4 stocks. So we have Intuit, SoFi, Tesla Q. This one still hasn't sold at 400, which is good because truthfully it just tells us that Tesla hasn't gone down further. HIMS, let's look at HIMS. So HIMS is another one of those positions that it seems like I was able to time appropriately. I got in at 1657. I have 3 $16 puts for the end of the month, which truthfully at $30, let's see what our premium was. It was 80. So at $30, that you're looking at $30 over 16. That's close to 2% for 2 weeks. It's not a bad trade, but I have enough HIMS exposure. I have 15. You see, I have pretty much 5 puts, and then I have 3 $18 puts for December. So this one may actually be one, and I'm surprised it hasn't gone up more. I mean, from 240 to 255, it's not a drastic change, but this is kind of a backstop trade. I think this one will print if it remains above 18. But that's pretty much it. This $16 one, I may increase this, but I'm not too concerned. And then I have the call on my shares at 20. So I'm not concerned about it at all. And 20 is because I think it had a run up. It ran up again to 1920, so I have to roll it out. But I think I'll be able to keep the shares on this one. So HIMS is going pretty good. Riot is another miner. It seems to be the best quality miner, so that's why I feel comfortable with this one. But again, they're just swing trades, not something I'm really trying. I don't hold any shares. I've got 10 $7 puts that expire in 2 weeks. It's at, it's rushing through $8. So, it's just one of those things that, look at that. I bought $8 puts. I bought them for 52. Oh, it's because I needed the collateral, but these would have done very well. I should have held on to this. I just made 20 bucks on this, from 57 to 52, but it was because I needed the collateral to sell calls on Intuit. It requires a lot of collateral because of the difference between where my strikes are and where my calls are. But that's all right. What else? $7 puts. These are fine. We have a $10, $210 call that is expiring in about a week and a half. This is good. I may be able to salvage this one. Tesla right now is at 218. You see, so it made a significant amount of money, but truth be told, I really don't like to buy these back, because the moment you buy it back, you're basically saying that you're predicting the market, and I'd rather just surf the market. If I really have to, I'd rather just roll this out. I could probably roll it out to like December, maybe. It's worth $1,600. So if I roll it out to December, I make $500 and I'm above the strike. So I'm not concerned about it. I've got a bit more time on that one, so I'm going to let that one ride. What else do we have here? We have the puts that we spoke about, the calls, SoFi, and then these backstop trades. These are trades that these are TSLL trades. These are the ones, I think we just opened a position on this. What did we open them at 70? Yeah, these are. I mean, this is pretty much just a waiting game. From January, and I've got $1,000, right? So, the way I like to visualize these trades is pretty much Christmas gifts. I'm putting up what is this? 15. So 673 times 15. You're putting up $10,000 for $1,000 of premium. And so basically what happens is I have those $10,000 saved. At the end in January, or if I close it out earlier, I keep my $10,000, and then I'll have $800, $700 to spend on gifts. So those are backstop trades. It seems like Tesla's going to continue going downward. We have some liquidity here. We have about $3,000. But that's pretty much it, guys. TSLL, I'm looking to add 100 more shares, but I just don't know if we've really hit a bottom. 945, 946. It's I don't know, but we are going to start nibbling a bit here and there just to kind of get to our position, drastically bringing down our average cost, which is always good, down to 1150, down 20% on our position. But you know what? It is what it is. That's pretty much it, guys. I mean, I'm looking at Intuit closely. I do like to set some reminders here. So for example, if it goes below 612, or if it goes below 610, or if we go above 620 or 621. There we go. So that's pretty much it, guys. I'm going to check the comments here, see if anybody has any Q&As, any questions. It could be about your positions, it could be about my positions, or it could just be general positions. Just let me know. I'm going to check the comments here real quick. Now let's go ahead, and if you guys follow me on X, which I really appreciate it, please also subscribe on YouTube. It helps me a lot. I also made a quick little bet with my followers where I posted that the closest one gets $50 Venmo or Cash App, whoever's closest to what Tesla opened. So let's go ahead and do that real quick. Went to Tesla. And Tesla right now, let's see what it says here that it opened at. Usually it tells you, so we don't have to guess. Let's see. Okay, right here. Open price. So the open price was $20, $2.20 So we have, I'm looking at the screens here. Adam El-Masri at 225, a little far. Hertzy 269, a little far. Just a young dude at 222, pretty close. Trading Wiz 259. Tricks Investments 242. Calls and puts got pretty close, 220. I think we got a winner there. Ath Capital 268. Elijah Alpha Guter 252, a little far. Charlie a little far. DJ 222, close, but not the closest. And then Charles 5 million. So we do have a winner. Calls and puts 55. Calls and puts 55 is our winner. So congratulations. Very good. That was you guys, you nailed it. That was very close. 220. You were 13 cents off. All right, guys. Thank you again for watching. We kept this at 27, 28 minutes. I always like to keep these under 30 minutes. You know, we all have things to do. It's Friday. So I appreciate you checking in. I appreciate you checking in with me. Please subscribe on YouTube. Please follow me on X. I am full transparency. You know, I'm a big fan. My favorite channel is an individual called TJ The Wheel Deal. And what I like about him is that he's transparent with his losses and with his winnings. And I try to do the same thing, because if I only show you my winners, then how do I expect you to learn? How do I expect my followers to also know, you know, what is a good trade and what's a bad trade? And selling options is a lot like riding a bicycle. And I say this a lot, but it's so true. You just have to get on the bike, and you are going to fall. You're going to scrape your leg, but you got to get back up. And then before you know it, you're going to be riding a bike perfectly, you know, and that's the goal of this channel, to help you guys all out. Thank you again for watching, and enjoy your Friday.